So I would like to say welcome to CA Final Revision Batch. What we're planning to do here, it's going to be 7+1 day batch. What is this plus 1 day? I'll tell you that also to all of you. It's going to be complete English batch because I have students joining from different places and I know that these recordings would be watched across. It will be hosted in my YouTube later, or I would give access to people who have registered anyway. So the batch would be primarily focused on giving you a recap of the CA final indirect tax paper on the ABC analysis part. We will look at what is priority, what is question number one, question number two. I had done an introduction video on this batch, and at that time I had told you that I've analyzed all the exams that happened with the new syllabus, and I've predicted that what is going to be the paper for Jan 26. So this batch can be primarily used if you're writing examination in Jan 26. Even if you're writing exam in May 26, this can be used as a revision, subject to small changes that will happen because of GST 2.0. So there are few chapters wherein the rate differences would impact. There are few areas where they have come up with circulars and amended it. If you're planning to write September 26, even more amendments are there because of November 1st. There is a bunch of amendments that has come. So primarily, I would suggest this would be used if to recap the entire topic, primarily for Jan and sometimes for May exam. And for September onwards, you might have to look at another type of revision that we will come up later with, right? So that's the structure. Every day we're going to spare about 2.5 to 3 hours, okay, wherein we will take a topic and do a recap. What is the meaning of recap? This is a session wherein we are going to recap the things that you've learned. So assuming that you've gone through GST at some point, we are assuming that okay, maybe you have gone through a GST paper. So let me help you to do a quick recap so that you will be prepared for your exam. Or you've gone through GST at some point, like that earlier. I remember Vignesh was there in the earlier batch, and then he was telling me the same thing. I've studied it in December, sir, what should I do and stuff like that. So if you're somebody who has studied GST or full-time study of GST, you have done some time back, and now you wanted to get an approach, like, you want to know what has changed and how should I prepare. So this video can even be used for getting an approach. If you're starting the GST paper, you can still spare the 20 hours. It will make your learning from here much, much easier. You will know what is there in each chapter and what needs to be done. And all those people who are attending this live, I want your full interaction on the chat box. I would give you time in the end for you to ask questions. So at that time you can shoot questions and then I can clarify all your doubts in that particular paper. Right? So that's the structure in which we're going to go. Okay, so let me also give you a picture that 20 hours is not okay, maybe 20 hours is what we will spare to recap. Plus, I've given this one extra day. What is this extra day to be used for? This is going to be used for two things. Primarily, to separately do a session on amendments. Because if you analyze the paper, you would know that at least 10 marks is coming from amendments. There is no doubt about it. Not necessarily that amendments would be tested, but amendments and related areas would be included in a question. The question type can be easily picked up and then discussed in indirect taxes and CA final. So there are areas where they're going to test your amendments, and then the amendments for particularly for January examination from September examination is very small. Like, you hardly have some circulars to clarify because there was no GST council meeting. The meeting discussion happened, which was introduced GST 2.0. That is applicable only from May 2026 exam. So for this exam also, so can you go out and then prepare nothing from amendments? No. ICAI considers their previous print of material to whatever is there applicable for the exam as statutory updates and amendments, and they're definitely going to ask you questions. So whatever is available for the last 1 year as amendments, which is applicable for your exam, you will have to go through that separately because this gives a higher chance of you getting better scores in your exam. You guys understanding? Okay. Now this is going to be a concept recap, right? I'll give you a recap of the entire topic. So in this particular concept recap, what will be the additional things that you might have to do? How you align your preparation with this? Say we are spending 3 hours per day, right? What you can ideally do is that you can even spare the whole day for IDT. Like I'll tell you what is the topic that I'm going to cover each day. What you can do is you might have to just spare some time, do that topic during the day, and then come back and attend the recap in the evening so that you can ask all those doubts that you have at the end. Also, you could basically, get some kind of an approach. Okay, how to summarize some concept that you've learned is not learned in the correct way. All those things can be clarified with me while you're attending the sessions. Okay, so this is a planning that you can do. Next question, would you cover 100%? No, I'm not going to cover 100%. I'm going to cover what is going to be at most tested in the exam. That's the recap that we're going to do. But we will try to cover whatever maximum is possible. There are a few topics that I can cover faster and easier. I believe that some topics you might even plan to skip in your examination. I might be able to cover that. I can do that. I will also show you some videos that I have already recorded and kept for certain topics that you can refer at your end if you wanted to maximize your efforts. Then, which book am I going to go through it with? What is this revision is going to be with? It's going to be with my chart notes. So spare with me if you do not have that copy with you. But my chart notes are very well aligned with your ICA material. So my suggestion would be that you can even open your ICA material and then recap together with it. Will I be able to share the PDF of the entire books with you? I might not be able to do that because it's a published book and others will have a problem with it. So I would, you can still access the PDF copy if you want. If you guys wish to access the PDF copy encrypted, I can give you a coupon code so that you can, go apply that in our website. And just with the encryption cost, you will be able to access that. If you guys want that, not mandatory. With any book, you will be able to go through this, but my session would be aligned mostly with ICA material. So if you're somebody referring ICA material, you can keep the material there or whatever material you have and then start referring across. Questions, will I cover questions during this particular session? I'll give you approach about different type of questions. So for example, if you're somebody who's just sitting there with the concept and do not know how to go and write an answer for computing net GST payable, that is compulsory question number one for you, then all the batch that I'm taking is irrelevant for you because you will not be able to go and then apply whatever you learn from here in your exam. So those kind of small formats I am going to give you. Like, say for example, you have formats for computing net GST, right? There are different type of things that you have to be careful about here. There should be a format that you should know how you write answers when it is value of supply. You should know what is the type of answer that you have to write when it is refund. You should know what are the tables that you'll have to prepare if you want to do an apportionment of credit. So these kind of small areas wherein your computational, clarity would be better because when you get the paper, you should be able to go ahead and then, write answers, right? That's the overall purpose of it. So we will try to get some kind of a, help in that aspect as well. Okay, I don't want to delay the whole process of getting into the topic. This is it. This is the plan of the batch. It's going to be a quick batch. If you guys wanted to, go through the whole topic, of course, if you're somebody who's writing into the May exam, you can use this as a summary batch. You can always go to our regular batch in TaxSchool and then try to get through the whole batch as well. So that's also a possibility that you have. And some of you guys, I am pretty sure, would have already subscribed to the batch, and then you might be just going through all the regular batch. So you might want just a recap of this through this session. For them, it is perfect. So here we are looking through the same notes, so it'll become super easy for you. And if you have doubts, I would prefer you to ask that on the chat box because that's an easier method in which I can answer. Sometimes my flow, I would like to finish something and then go to the next topic. So this would help me also to think in that order. So towards the end, if you want to just unmute and then speak to me, that will also be an easy option for you to do. I'm primarily channelizing the efforts from here till the examination through our, I have created a separate Telegram group. I can give the link for those people who want to join later and then discuss anything that is left out and avail all our free materials. You can join the Telegram group and you can always interact with me in terms of your doubts, and even peer learning can be possible. One person can suggest the other, and then it is going to be a closed group. It's going to be smaller number of people I wanted to have inside the group for Jan exam. So we'll try to curate the whole experience to you. Okay, that's it from my side. Let's get started with our first topic. If you look at CA final, the topic that we have, we can broadly classify the topics into two, three segments. Okay, you already know that our syllabus is split between GST, Customs, and FTP. And FTP is just one question, 4 marks, some summary notes you refer. I have given scheme wise, videos on my, YouTube, or you just search for the scheme wise video in YouTube, and you would get all that, available to you. That's the only question that you will get on FTP. So there's generally no question inside other questions which is on FTP. So it's better to keep it in your ABC analysis, FTP to be the last one that you read. But if you're somebody who's already studied and now wanted to maximize your score, looking at an exemption and beyond, FTP would be a good add, and you can selectively study FTP instead of reading the whole topic, because you know that it's going to be a theory question. You know that they're going to test on the schemes, and then there are certain areas. It's also easy for you to go through all the RTP questions for theory part, because a lot of RTP questions gets repeated in the main exam. Then on the GST and the customs, there are areas that is going to be repeated in multiple exams, so we can broadly divide them and then try to learn. In GST, if you analyze, first 8 chapters, possibly 7 to 8 chapters, will basically give you the answer to this question called net GST computation. And this is what primarily that we need to cover first, because unless you cover that fundamentals, okay, if you're somebody who has studied inter, you would have learned a bit of it already. And at final level also, you have the same thing being repeated, but with extra topics, extra circulars, extra industry analysis. This is where you have to stress and then try to understand the overall picture of it. It's also very important that in GST, you club and then learn it. You cannot go and then just read one chapter. That's primarily the problem with ICAI material. You read one chapter, you just read only those topics that is relevant there. But ideal thing for you to do is to always club all the chapters together. First 8, 9 chapters has to be interlinked. Okay, that's how you should learn it. So chapters, like when I say first 8 to 9 chapters, the chapters like your supply, charge, exemption, place of supply, time of supply, value of supply, and ITC, and a bit of TDS, TCS, and payment part. If you club all these chapters, you should be able to answer that net GST computation question. So this is the first segment of learning, because this covers around 60% of your GST learning. Then you have the second segment, which is procedures, okay, which includes your segments like registration, invoicing, payment, returns, accounts, e-way bill. Okay. Then some areas like import and export and refund, which are also tested a little bit. We can even keep it a separate segment also. Refund is a chapter that they're occasionally asking as a 5 or 6 mark question. So you have to be careful about maximum refund computation. Then you have assessment. Assessment is primarily repeated with questions, either a practical theory question or theory question. You have to analyze which are the areas which are very important there, and always do all those amendments in those assessment areas. That will clear off. So we'll go in that order. We will keep the assessment for the last. I'll be solving questions. I said like only those model questions. If things work and then things are better, and you can be in the Telegram group, we can even look at questions as a slow learning process. Maybe one question type at a time we can solve on the go. Let's see how our time and efforts is working towards solving questions. But I'll try to solve the questions which are there from the institute study material, so that everyone will have an access to that question. Okay, so let's see that separately. You also have 30 marks of MCQs that you need to cover, which also primarily something that you will have to look at from. There is a case study, scenario based questions that is announced by ICAI. You can always look at that. I can give you a consolidated book of that on the Telegram group. I will give you that PDF. You can go through that. And that, if you go through itself, you will get large number of clarity in terms of a lot of topics that you have learned as theory is being tested in MCQ. So do not go and then try to read standalone MCQ. That is not going to add any value to you. Case study MCQ primarily because you wanted to know that you're finishing the topic within the given time for you. So you want to finish that 30 marks of MCQ at least by 45 minutes. If you're able to do that, then you will be able to finish 100% of your answers within that 3 hours time. So that's the primary purpose that you have to do. That's also has to be a separate discussion. Now, in this first segment of discussion, I believe that value of supply being a chapter which is standalone will be the easiest for me to discuss. So let me just first take you through the value of supply as a chapter. So today's target also would be to look at value of supply, related segments, and all the circulars that comes together with it. Some circulars have cross references. We will try to cover that as well in our revision. Okay. With this, can I start? Can I have a quick yes from all the people who are attending it live so that I can go with, some kind of an energy, resonating back from all of you? Okay. Perfect, guys. Thank you so much. So let's get started with our discussion. So first, let me just show you what is there in value of supply chapter. So value supply chapter for me can be divided into two segments. Something that you've already learned possibly from your intermediate or earlier discussion, which is section 15 value. Plus, there is something called as valuation rules that we will have to learn, which comes with a bunch of amendments as well. So these are the two segments that you have as a learning inside it. And the questions that they ask primarily are based on either section 15 or valuation rules. These are the questions that you generally get on this area. And this is one chapter that I'll be able to give you full clarity. If you spare a session, I can at least make sure that all of you understood what is value and then what are the related circulars, what are the valuation rules that you have and how this will be tested in the exam. This is where I have a little bit of confidence that, okay, if you spare some time, this is one chapter wherein you would have some takeaway and say that, yeah, I've learned this. It was great to have this kind of a session. That's my, thought process. Let's see whether you are able to do that. Now, what is value under section 15? We will try to understand. We are looking at CGST Act 2017. In GST, value is determined like this. So section 15 says value is transaction value under section 15.1 plus items to be included in value under section 15.2 minus discount under section 15.3. If you analyze the discount part, there's slight amendments that has come, which is going to be beyond your Jan exam. So I'm going to leave that around. So value is very simple. It's transaction value. If I'm selling a mobile phone for 10,000 rupees, that's called transaction value. And if at all I have collected something beyond that and I have not included in the value, they're asking you to include it back in the value by using 15 subsection 2. Minus, if you have given a genuine discount, you can reduce the discount under section 15.3. This is the section 15 valuation provision says. Now, to adopt a section 15 value, they're saying that there are two conditions that needs to be satisfied by the person liable to pay taxes. What are the two conditions? The supply is not between related person. Now, who is a related person? They have defined 9 set of people as a related person in GST. Officer or directors in each other's business, legally their partners, family members, employer and employee, sole distributor, concessionaire agent. If they control each other, together they control a third party is controlling both of the entities, third party is holding in two entities more than 25% of voting power or shares. There are 9 segments of people who are defined as related person. Inside this family member definition goes like this. They said it's a very small family that they have defined, like Companies Act, not like Income Tax Act. It's a very small family member that will be considered to be a related person under GST. They said spouse and children are always considered to be a related person. Brother, sister, parents, grandparents, they are considered to be a related person or family members only if they are wholly or mainly dependent. Say, my brother will be considered to be my related person if that brother is completely financially dependent on me. Otherwise, that brother is not considered to be a related person. What is the impact of calling somebody as related person? If they are a related person, I cannot adopt section 15 value, which means the transaction value at which I have sold goods or have provided services cannot be the value that I adopt for the purpose of GST computation. Instead, I have to go to valuation rules, which possibly most of the time says go and adopt a fair value, which is open market value. Okay, so if it's a related person, just think that, okay, maybe you have to take a market value. Now, to adopt section 15 value, the supply should not be between related persons. Second reason, the way they are saying that you cannot take section 15 value is when when price is not the sole consideration for supply. Or we can say, to adopt a section 15 value, I have put a condition saying the price at which I'm selling the product must be the only or sole consideration for the supply. You guys understanding? Okay. Now, again, what is the meaning of price is the sole consideration for supply? They're saying that it should not be a case of an exchange. I sold a mobile phone for 10,000 rupees, and if I'm collecting 10,000, I can say that the price 10,000 I got is the only consideration. What if I give a mobile phone to somebody and they're giving me 5,000 and some other phone for 5,000 rupees? They're giving some other consideration which is not in monetary terms. I would rather call this as an exchange case. In that case also, don't adopt the section 15 value and say that 5,000 is the value of the supply. So they're saying that there also I have to adopt what open market value or the value as mentioned in valuation rules. So all those valuation question, we have to be careful if it is coming under any of these things. Okay, if it comes under any of these things or other notified cases, I have to take the value based on valuation rules. If it is not the case, if that's not the case, I would go and then take the value as per section 15. Now, section 15 is a very simple discussion. Section 15 says transaction value under section 15. When you have to add something, you have to reduce the discount. Very simple one. Then in your first segment of discussion, you just have to understand what is section 15.1, what is section 15.2, what is section 15.3. Simple, straightforward discussion. Can I look at that? Section 15.1 is defined like this. It says transaction value should be the value for the purpose of supply. What is transaction value? Price paid or payable for the supply. The entire understanding of concept of valuation is inside this wordings. What is that wordings? Paid or payable, which means what? GST department does not intend to collect GST on the amount that is not payable. Say I decided not to collect something. I decided to give something for free. There is no consideration I'm expecting out of something. So if something is not payable, there cannot be any GST on that. So that's what I've written as a note here. Notional amounts which are waived and not payable need not to be added to the value. Now, sometimes what happens is that people would collect extra money. Let's say I've sold a machinery and I've written in the bill machinery 1 lakh rupees. I've written other amounts like packing I've written separately, installation I've written separately. Now, should I add all of this value into the machine value or should I have separate GST levied on all of this transaction? This is a common confusion that people are having. There are two concepts that we have for this purpose. One, if at all, this is provided as a separate supply by me to them. What do you mean by separate supply? Like say, for example, if I'm providing this machinery and I'm providing installation as a service, right? I'm providing it as a separate service. If that is what I have done, there is a concept called section 8, wherein there is a definition of two type of supply that is given in section 2 clubbed with section 8. We can say there are two types of supply called as mixed supply and composite supply. If I'm giving machinery together with a delivery service, together with installation service, I can call it as a composite supply and still add the value of this incidental supplies into the main supply. We call them as principal supply. So that's where the concept of composite supply lies in, where when I have more than one supplies that I'm giving, one is a principal supply, other is an incidental supply. We have a concept, if it's naturally bundled, it will be considered to be composite supply. Primarily by calling a supply as composite supply, I'm adding some incidental supply value back to the principal supply value. Are you guys understanding the structure? Now, very similar concept is there in valuation as well. What if I'm not providing this as a supply to somebody else, but instead it is it's part of my supply, but I separated that in the bill? How do I understand this? Like say, for example, packing. I'm not providing packing as a service, but I have separated in the bill the machinery value or the goods value and the packing charges separately. I'm not providing packing as a service. It's not two separate supplies. So in this cases, should I add this packing charges also into the value of supply, or should I treat it as a reimbursement of expenditure? Okay, so thought process is this: when there is some kind of a reimbursement of expenditure, that also should be going into the value of supply, right? So to have this kind of a concept, we have introduced, and in GST there is a section that is introduced called as 15 subsection 2, which says that even if the supplier is splitting certain value and then putting it in the bill, I will have to still add back to the main supply and then still pay GST on the main supply value. That's what is covered under 15 subsection 2. And 15 subsection 2, if you want to analyze, this chart will act as a fundamental for you to analyze the entire section 15.2 in a simple structured manner. Okay, let's try to do this. Look at it. In 15 subsection 2, there are 5 clauses that we have, and each clause has a specific purpose by which we will analyze and then include this. 15 subsection 2, clause A, B, C, D, E. You can see each of them specify about certain expenditure that needed to be added back to the value. That's the primary objective of this particular provision, right? Now, let me try to explain this segment to you. There are some wordings which are in yellow that you might not be able to see them clearly, but I'll explain that separately to you. Okay, so let me just go to each of them, explain you that once, and then finish off that discussion. First, taxes, duties, cess, fees, and charges levied under any law other than GST and cess, if charged separately by supplier from recipient, should be added to the value. What is the meaning of this 15(2)(a)? They're saying that any taxes other than GST and GST compensation says, if it is collected from the customer by the supplier, needs to be added to the value. There are 3 areas that is basically tested in the examination when it comes to that. Let me give you an understanding of that. Basically, they test entertainment taxes, excise duty on tobacco, and sometimes municipal taxes by local authorities inside it. Thought process is very simple. Entertainment taxes are having a slight different provision in GST. What they have basically done, when GST was introduced, they were supposed to merge all the other local taxes, but they decided that since GST is divided between central government and state government, they would still keep certain revenue stream for local authorities, still continued even after GST. And one such structure that they have built is entertainment taxes. Even after introducing GST, they did not merge the entertainment taxes levied by local authority into GST, which means what, when there is an entertainment event happening, it's at a, be it sports event like a IPL match happening, or it's a movie that somebody is watching. There are 3 taxes parallelly levied on it, or 3 governments gets the revenues. One, a local authority gets entertainment taxes, state government gets GST, central government gets GST. Understanding? So there was this question, when, say for example, there is a cricket match that is happening, and the base value of the ticket is 800 rupees, and I have to levy both entertainment taxes and GST. On what value GST would be levied? And then the answer from 15 subsection 2 clause A says that GST should be levied on a value including entertainment taxes. So any taxes other than GST should be included in the value. So 800 is the base value and 200 is the entertainment taxes. So 1000 will be the value on which GST would be levied, is what the understanding. Similar is the case with excise duty on tobacco and tobacco product. The primary point is that when GST was introduced, considering tobacco and tobacco product called a sin and luxury product category, they decided not to remove the excise duty erstwhile charged. So when tobacco products are being manufactured, excise duty is still levied under a separate act, plus GST is being levied. On what value you will levy GST? The GST would be levied on a value including excise duty, is the understanding. I hope this is clear to all of you. Sometimes they ask questions on municipal taxes also. Now, if you go back and then analyze this, you will understand that there is one circular clarification that can be tested in your exam that is available here. It talks about TCS under Income Tax Act 1961, and it says that even this can be, it can be beautifully tested in your, the optional, I mean, like the case study paper, right? So in that case study paper, if where they wanted to club income tax as well as GST, they could even ask a question on TCS and then how it is going to be merged, right? So if you analyze and then look at this, and in your integrated case study, they can ask something like this on income tax and GST. Now, what is this circular says? It says that TCS under Income Tax Act does not have the characteristics of tax mentioned above, hence it is not to be included. I can give you one quick example to get your understanding correct here. Now, there is one case of TCS that you would have already learned, which says that if you're somebody who's a person who wanted to purchase a car, and if the showroom price of this particular car happened to be more than 10 lakh, you're supposed to pay to the dealer a 1% of ex showroom price as tax collected at source under Income Tax Act. So there is TCS concept in GST as well. I'm not talking about that. I'm talking about TCS, that concept that we have in Income Tax Act. Now, this TCS of 1%, will it be included in the value for computing GST? The answer is no. It does not have any characteristics of tax mentioned under 15(2)(a). I'll tell you why they're putting a word like that. Say, look at this example. Perfect Honda is selling a Honda City. And I've written the ex-showroom price computation like this. Ex-showroom price includes GST because GST is something that is billed by the dealer before the product is kept outside the showroom. Like when you go and buy the car, they will give you a bill. Bill will have already have value and GST. Let's assume that value of the base value of the car happened to be 12 lakh. GST and cess was there, and total ex showroom price is 18 lakh 36,000, which is more than 10 lakh. So it attracts 1% TCS. So the showroom is going to collect from the customer extra 1%, which means the showroom is going to collect 18,360, 1% of the ex-showroom price from this particular customer. Question is this: on what value GST should be levied? GST will be still levied on 12 lakh base value. The tax will not be added. Primary reason why they're saying that even though all other taxes other than GST has to be included in the value, this particular 18,360 will not be added for primary reason being this does not have the characteristics of tax mentioned here. Now, when I say tax mentioned here, it means that this has nothing to do with the Honda City. All this excess duty on tobacco, entertainment tax on sporting event, all these were taxes on the supply. This has nothing to do with the supply. This is basically a method in which income tax department is trying to collect extra income tax, thinking that Mr. Raju, who's buying a high value item, might have certain income tax that is payable. So they have clarified that you need not include TCS under income tax into the value. So there are a lot of high value item purchases which has TCS under income tax applicable. Those items you will not include that in the value for computing GST. You guys with me? Now let me ask you a extra bonus question here. You know that in automobile industry there is something called as ex-showroom price and on-road price. Now, what is the difference between an ex-showroom price and on-road price? GST is not the difference. GST is included in ex-showroom price. You primarily have three additional things on top of it. Number one, road taxes. Number two, insurance. Number three, registration charges. Okay, so your RTO charges. These are the three things. So you can take the vehicle and then keep it outside the showroom if you pay the GST and the value to the showroom guy. To drive it on the road, you have to pay road tax, you have to pay RTO charges, and you will have to have a road insurance. Right? These are the three things. That's why we call this on-road price. To get it from the showroom to the on-road, you have to pay these three things. My question to you guys, I want an answer on the chat box. Just an extra question for you is that should this road taxes be included in the value for the purpose of computing GST? No. What is the reason why we are not adding that up? Because if you look at 15(2)(a), there is a wording that is very clearly talking about it, because all those things that you have there primarily says what this wording is the reason that we are not adding it up. If charged separately by supplier from recipient, anything that you add under 15 subsection 2 from clause A to clause E has to be charged. So the road taxes, the registration charges, the insurance, these are not collected by the dealer. To collect a tax into the value, that tax should have been collected by the dealer, right? So entertainment taxes, all that is collected from the customer by the supplier itself. Here it is not. Road taxes are directly paid by the customer to the government. So these are not considered to be charged by the supplier. So we will not add it up. Clause B says direct third party payment by recipient on behalf of supplier in relation to supply will be added to the value of supply. So what is this clause B primarily talks about? Let me give you a structural understanding of this. One quick question would actually answer everything about it. So just a tax planning method that people would primarily use, which can be managed like this. Say a bank wants to, okay, look at this example. It's a good example to look at. A bank wants to get transportation services from a GTA. Let's assume the GTA is under FCM. GTA can opt for FCM. Let's assume GTA has opted for FCM at 5%. So their GTA bill has happened to be, the freight has happened to be 1 lakh rupees, plus there is a GST rate of 5% added into it. 1 lakh 5,000 is what the bank is basically paying. Now, the bank knows that if the bank pays extra amount, bank will not be able to take the input tax credit because bank has this 50% restriction on the ITC part. Now, bank wants to reduce the GST component on this particular bill. Now, how can the bank reduce the GST component? There's one practical method that they will use is that bank will try to look at what is the cost that the GTA is incurring. Now, look at GTA services. The how will they would have determined that this 1 lakh as the price for transporting goods for this bank? They would have looked at what is the cost for providing GTA service plus the margin. What is the major cost for a goods transportation service? It's fuel. We know that fuel, which is diesel, petrol, etc., are not subject to GST. So I use a code word to say which are the products which are not subject to GST at the moment. We call this code word as HP man. Okay, I can expand it. There are 5 products for which GST is not levied at the moment, will be levied from a future notified date. And the code word is HP man, high speed diesel, petroleum crude. H is for diesel, high speed diesel. P for petroleum crude, petrol. M for motor spirit, other motor spirit other than petrol and diesel. A for ATF. ATF is the flight fuel, aviation turbine fuel. N stands for natural gas, your CNG. These products are not subject to GST at the moment. So if at all this petrol diesel is purchased by somebody, there's no GST. However, when petrol diesel becomes part of the cost of GTA services, GTA, when they are billing it to the customer, will have to pay extra GST, right? So to avoid this, what banks can do as a tax planning method, which the government is trying to counter by putting 15 subsection 2 clause B, is that bank says GTA, let's split the 1 lakh amount into what is the fuel cost and other fuel cost plus your margin. When you look at the fuel cost, happen to be 50,000, for example. Out of this 1 lakh, 50,000, let's assume it is a fuel cost. Now, this 50,000 fuel cost, if it is directly paid by bank would not pay any GST. When GTA is only billing 50,000, there is GST only on 50,000. Are you guys understanding? So people will try to, what GTA can do here is that they can reduce the value for what purpose? To reduce the GST payment. How are they doing it? They're asking one of their expenditure directly being paid by the recipient. To avoid this kind of a scenario, they've added 15(2)(b), and what is that 15(2)(b) says? Any direct third-party payment. Who's making this third-party payment? Any direct third-party payment made by recipient on behalf of supplier in relation to supply will be added to the value. Right? So all these bullet points that I've given should be part of your understanding to add it to the value. Now, sometimes what happens, the same transaction that I've gone, what if it's a very different transaction between the fuel supplying company and the bank? They're supplying the fuel to the bank and then the bank provides it to the GTA. It can be completely excluded from the value. Right? So if it is not like that, if the bill by the fuel company is the petrol station is giving the bill to the GTA, then it is understandable that it is a payment that should have been made by the GTA, and on behalf of GTA, it is being paid by the bank. So such payment will be added back to the value. Now, if you look at the clause C, it says incidental expenses incurred by the supplier in relation to supply at the time or before the delivery of goods or supply of service and charged by the supplier to recipient will be added to the value. Generally, what happens is that there are so many expenditure, they show it in the bill separately. Like I've given, I have a bunch of examples that I have listed, which is generally tested in the exam. Examples are like this: packing charges, testing charges, inspection charges, installation charges, weighment charges, warranty, additional warranty, sales commission, cost of instruments specially purchased by the supplier. All of these amounts, what can be done? So instead of putting this as part of the value of the goods, what they'll do, they'll try to split it. In the bill, they'll give you all of this. They say that for the goods, I'm charging some amount, and for all the expenditure that I'm incurring, right? Maybe a third party is involved in doing this. Say I'm doing packing from a third party. That third party packing I've included as a separate line item and saying that it's just a payment that I collect from the customer and I pass it on to someone else. Should not be part of my value. Those kind of understanding will not stand. They're saying all of this could be an incidental expense. Who incurs this? A supplier incurs this. And finally, what happens? It is charged to the recipient. It's part of my cost of providing this goods or service, right? What is the clause C says? Incidental expenses incurred by the supplier in relation to supply and finally charged to the recipient will be added to the value. right? All of these things, if it is collected from the customers, should be part of your value of supply is the understanding. Now, what is weighment charges? Okay, I'll give you an example. Say I have promised that the customer that I will deliver the product to their location. Before that, I will check the weight by an independent third party. So my product is valued at 1 lakh rupees. To check the weight, the 1,000 rupees that is being charged by the weighbridge. So the total now I'm collecting from the customer is 1 lakh 1,000. Why this 1,000? I paid a weighment charges and I finally collected from the customer. This weighment charge is an incidental expense incurred by the supplier in relation to the supply and finally collected from the customer. It should be taxed in the same rate of GST applicable to my goods. It should not be treated as a separate supply. So this, if you look at payment service is not provided by me, it's provided by third party and I just got that money from them. If it was provided me by me as a separate supply, I can say it's a composite supply. That's how you differentiate the entire transaction. Are you guys understanding this? What's the difference between composite supply and incidental expenses? Is that differentiation clear to all of you? Say, for example, inspection. Inspection, if I provide as a service or a third party does the inspection charges and I collect it from the customer. Third party provides the inspection charges. I bill that to the customer and then collect. Then I would call this as an incidental expense because I spend it. If I only provide, my own employees provide inspection and then I bill it to the customer, I would call it as a inspection supply, inspection service as well as supply of goods. It will become a composite supply. Okay, I hope this is clear to you. What is clause D talks about? Clause D is something that is being tested in the exam multiple times, so you have to be a little careful about it. They're saying that any interest, late fee, penalty for delayed payment of consideration to be added to the value. Normally, when a supplier is selling goods or providing services to the recipient, and it is a credit sale, there is a normal method that you give certain credit period, and if the customer is not paying beyond within the credit period, any days beyond the credit period that is being offered, the supplier will collect an extra interest from the customer. The question is that now I gave a bill initially for 1 lakh rupees plus 18% GST, 1 lakh 18,000. Now, because the 1 lakh 18,000 was supposed to be paid in 1 month time. Now, the customer paid after 3 months. I charged them 2,000 rupees extra interest also. Now I gave a bill of 1 lakh 18,000 rupees. I got in my bank account 1 lakh 20,000 rupees, 2,000 rupees extra. Should this also be subject to GST? The answer is yes. Any interest, late fee, penalty for delayed payment of consideration should be added to the value. You guys understanding this? Now, there are two notes that I've written there which is going to be relevant for your exam. Note number 1, which says such interest, late fee penalties will have a separate time of supply under section 12.6 and 13.6. What is the understanding of it? Such interest, late fee, penalty will have a separate type of supply under 12.6 and 13.6, which means, say, in the examination question, it could be very relevant for you. Okay. I'm going to show you an exam tip that you can use for this. You can read through this and then try to understand. Okay. If you guys want to keep it, like all these screenshots would help you. When an exam question has the interest on delayed payment, you need to check the following. Number 1, is the question specifically talking about GST being excluded? If not, we assume GST is always inclusive, which means what? In all the question, if nothing is mentioned, our assumption is that they have given goods is sold for this value, there is packing charges. What's our assumption? All these are given exclusive of GST. I'll just apply GST on top of it. However, in the question, they have just said they collected the interest of 10,000 rupees. Or in our example, I told you that there's an interest of 2,000 rupees. Our general assumption is that this 2,000 is including GST. That's how we will assume it for our exam. However, they've given there's an interest of 2,000 rupees and they also mentioned it is exclusive of GST. Then don't make an assumption. If the question is specifically saying every amount is excluding GST, go by the question. If nothing mentioned, interest alone will be treated as inclusive of GST. So we'll have to separate GST by using the formula of inclusive computation. Interest into 100 divided by 100 plus GST rate. Second, say I made my original supply in January, right? For 1 lakh plus 18,000 GST. 1 lakh 18,000 is billed in January. Then I made my January is over, February is over, March came. They didn't pay till March. So in April, when they paid, April 15, they made the payment. I collected 1 lakh 20,000. So 2,000 interest is collected in April. The next question would be, This 2000 will be subject to GST. You have to consider 2000 is inclusive of GST. Which month I have to pay the GST on this 2000? Should I pay in January? The original supply time of supply will apply, or I should take the time of supply as April itself. 12.6 and 13.6 in CGST Act, which talks about enhanced consideration, would apply. The time of supply for this interest would be the date in which I paid the interest. That's what is something that you've just read it. Look at the note number one. Time of supply for enhanced consideration would be the date of payment of interest, a late fee penalty. Now, what will you do with the examination question is that, look at, if the month in which interest is paid is given, sometimes what they'll do, they'll give you a question on computation of value, and the month in which interest paid is also given. Then you have to compute value of supply, GST payable, time of supply, due date separately. You need to have two computation. One is for January month, one is for April month. In April, you will compute GST liability just for which cases? Just for the case of interest alone. For January, you would include all other things and then compute a value there. Are you guys understanding? This is the exam type. Now, I have given an invoice initially for 1,18,000 in my example. Now, this 2,000 interest I have collected, what document will I give? Can I get the answer on the chat box? You tell me what document should be given. Debit note. Perfect, guys. The document is debit note, or we call this a supplementary invoice. So that's what I've written here. Debit note is the document, and the best method in GST to learn documents is that you understand the need for this document and then learn the document instead of going and then learning all documents in invoice chapter separately. So when you've already issued invoice, you want to increase the value or the taxes in the invoice, you have to issue an additional document called as debit note. You cannot issue an additional invoice because every invoice requires a supply on the back end. You guys understanding this? Okay, so I've written it here. Debit note is issued when interest on delayed payment of consideration is received by the supplier. Why? Because invoice is already issued. Value or tax in the invoice was less than the actual value of tax, because now I'm collecting little extra. Then the supplier issues debit note to the recipient to increase the value of taxes. So invoice will create an outward tax liability for you. Debit note will also increase your liability there. So debit note is also a document. If the supplier issues, creates an extra GST liability. As recipient, you think, as a recipient, if you get an invoice, you will be able to take input tax credit. You get a debit note also, you'll be able to take input tax credit. Fundamentals. Look at clause E that we have here. It talks about subsidies directly linked to the price. There are two types of subsidies that we talk about. One is a government subsidy, another one is a non-government subsidy. Now, first, let's try to understand what is subsidy directly linked to the price. These are subsidies which can reduce the price. Say you're purchasing a electric scooter. Electric scooter is priced at 2 lakh rupees. But because of FAME 2, FAME 3 plans of the central government, the seller of this electric scooters is getting a subsidy from the government, which reduces the price that is available to the customer. So if 2 lakh is what is the price that is available, or the price that is at which that is sold by the seller, customer gets it for 1,20,000. 80,000 is provided by the government to this seller, right? I paid 1,20,000 to EV scooter company, and 80,000 is paid by the government. So 2 lakh is what is collected as value by the seller. Should they offer this 2 lakh for GST? No. If the subsidy is a direct subsidy, can I call this as a direct subsidy? Yes. A subsidy that reduces the price is called as a direct subsidy. If it is a government subsidy, it can be reduced from the value. On 1,20,000 only GST would be applicable. However, this 80,000 is not paid by the government, instead paid by their holding company as a method of financial help, or it is given by other than government, some kind of a CSR fund. So anybody other than government provides a direct subsidy, cannot be reduced from the value, should be treated as if it's a consideration, and the value would be 2 lakh in that particular case. Now, what about indirect subsidy? What is an indirect subsidy? Subsidy which is not reducing the price. Say there are cases where government or other than government might give money to people to set up factories. Money is being given to purchase certain items. These are not directly reducing the price of the product. So these are indirect subsidies. In our computation, we ignore this. I cannot go and then reduce the subsidy from my outward supply value. So that's not possible. I told you guys that section 15 discussion is basically three sections: 15 subsection 1, 15 subsection 2, and 15 subsection 3. We have done 15.1, we have done 15.2, we are now looking at 15.3. So value is 15.1 plus 15.2 items to be added minus 15.3, which is discount. Now in GST, we are talking about two type of discount that is given on or before the time of supply and after the time of supply. Now, can I reduce the discount? Reducing the discount means my value would get reduced, right? Now, can I reduce the discount from the value of supply? Yes, you can reduce. Now, first we ask the question: is it close A discount or close B discount? If it's close A discount, which is like you go to a shop, you get a discount, you can reduce it from the value. Why? Because in the invoice itself, you can show that discount and reduce the value. So you pay GST only on the net value. That's what I've written here. Discount given on or before the time of supply can be reduced from the value, provided recorded separately in the invoice. I can reduce it from the value, no doubt. What if it's given after the time of supply? Can that also be reduced from the value? The answer is yes. It can also be reduced from the value provided following three conditions are satisfied. Number one, it should have been existed at the time of supply as per the agreement. Number two, it should be specifically linked to the relevant invoice. Number three, proportionate reversal of ITC should be done. Okay. Now, what is the discount that is given after the time of supply means? I gave the supply. What kind of discount would be given after the time of supply? It could be a payment linked discount. Say, I'm giving a condition that you have to make the payment within 30 days. And you make the payment within 30 days, I might offer you a discount. Can that discount also be reduced from the value? Primary problem here is that, say, I sold you the product. Let's assume I am the supplier. I sold you the product in January month. I gave you a bill for 1 lakh 18,000 GST. I gave a condition at the time of sale itself. I put an agreement on the back of the invoice. I have given terms of sale, or I had an agreement by which I sold you the product, where I clearly written, if you make the payment within 30 days, you're eligible for 10,000 rupees discount. Question is this: I gave you the bill for 1 lakh. Now you paid me within 30 days. You are only paying me 90,000 instead of 1 lakh. Can this 10,000 be reduced from my value? Corresponding tax liability can also be reduced. The answer is yes, provided three conditions satisfied. Number one, I should have promised this discount at the time of supply. Number two, I should be able to identify against this discount which invoice belongs to, against which invoice I should reduce the value. Number three, if you have, the one who bought the product from me, if you have taken ITC on this entire 18,000, now on this 10,000, 1,800 is the value of auto tax liability I'm trying to reduce. If it is 90,000, my auto tax liability should have been 90,000 into 18%, which is 16,200. But my liability already paid would have been 18,000. Now the question is, if I want to reduce my liability from 18,000 to 16,200, my customer's credit also should be reduced. So for what reason? For that reason, what should I do? Can I show this discount in my invoice? No, there was no invoice issued. The invoice was already issued at the time of initial supply. Now the discount is given after the supply. What document will I issue to reduce the discount and corresponding tax adjustments here? Like in the earlier case, we have learned a document called as debit note. Now, in this case, we will learn a document called as credit note. So here the supplier will issue credit note to the recipient and then reduce the value. So credit note will be issued for 10,000 plus 1,800 rupees, right? So with this credit note, the moment the credit note is received by the recipient will have to reverse what? 1,800 rupees. There's an additional circular that has come very recently on top of this, which also not going to be applicable for Jan exam. But you understand the primary point here, right? So I issue a credit note for 10,000 plus 1,800. The moment the credit note is received by the customer who has taken the credit of 18,000 will reverse 1,800. My liability can also be reduced by 1,800. So if these three conditions cumulatively satisfied, I will be able to reduce the value accordingly. So we have finished our recap of 15 subsection 1, 15 subsection 2, 15 subsection 3. Is that clear, all of you? Can I have a quick yes from everyone if you've got the primary understanding correct? All right. So what we'll do, I'll try to introduce you to a question, what kind of question that they'll ask on this. A simple question we can look at and then try to close this area. If you have ICAI material, you might want to go to 6.69 and we can look at one question there. So this, if you look at question number 9, this is a typical simplest question that they ask on value supply. There are better questions than this. There was an ICAI additional question bank, which has a question on Singhal Brothers. That's one question that covers everything. There's a question on Jonty Limited or something. These are questions which are good in this area, but this is a simple question. So they'll give you a bunch of items and they'll ask you to compute what is the value of supply. Look at, they've given This question is asking you determine value of taxable supply. That's one type of question that you have. And look at this question. They said Vayu Limited provides you following particulars relating to goods supplied to Agni Limited. List price, this is called transaction value, right? List price is transaction value. So when you write this, how do you write the answer for this? This is 15 subsection 1 transaction value 76,000. You have to anyway add it to the value. So you create a table wherein you will have heading that will be computation of taxable value of supply. Then you have particulars amount. You rewrite each item here. Number 1, 2, 3. You decide whether it should be included. If it should be included, you will write it here. Then what you'll do, each item as and when you write, there itself in bracket, you write the working note. Since its value, you can write a comment saying that everything is as per CGST Act. You don't need to write CGST Act for section numbers again. So you can just write everything is from CGST Act because valuation has only one section, section 15 for value of goods, value of service, and value for the purpose of CGST, SGST, IGST, everything, just one section. So you can just quote CGST Act and then keep writing the provision. So since you don't have a GST column in this kind of computation, there is no need to separately write working notes. No, that's how normally we'll write. No, we'll write working note number 2, 3. You don't need to write like this because this will take a lot of time. You have to finish this. Then your brain has to think through what was the working note for this. What the ideal thing would be to just write the case here, then write the working notes there itself, and then write the amount. Here, you would have created a table. You would have written this. You would have written 15.1 here. You would have included 76,000. This is transaction value. Special packing at the request of the customer to be charged to the customer. This is 15 subsection 2 close C. It's an incidental expense. Packing charges. You would include this also. Duty levied by local authority on sale of such goods. So these are taxes other than GST. So 15(2)(a), you will add this up in the value. CGST, SGST charges separately. No, GST is not included. So this and this one common working note would be more than enough. So you will not include this. Price linked subsidy received from NGO. NGO is non-government subsidy in relation to the goods sold. The price is 76,000 is after considering the subsidy. The 76,000 has already reduced the subsidy. So you have to add this also back. So you will compute what is the value. So look at the answer, how they would have written. Question number 9. So 76,000, they've added packing charges, duty levy. They did not add this. They have added this. They got they reduced. There was a discount. They reduced that 3% discount. What kind of discount was that? Vayu Limited offered 3% discount on the list price of the goods, which is recorded in the invoice. So this is 15(3)(a) discount. So that discount is reduced from the value here. If you look at the answer, then you got the taxable value. But here what they have done, they have separately written the working notes. I'll suggest, since these are like two column tables where particulars and amount is written, it's always better. You will save some time if you write the working notes here itself. And the value will go and then value this better. All right. So look at the second question that we have. I'll take up a question from here. See that we can do in the next session if you guys want. We can look at a little bit complicated questions, and then I can give you a PDF of that to you guys later also. That's also a possibility that we have. Look at this question. There's another type of question that has been repeated across. I'll just quickly read the question and try to give you the understanding of it. Binaka Electronics Limited, BL, is engaged in manufacturing of televisions. It is registered in the state of Haryana. It has appointed distributors across the country who sells the televisions manufactured by it. The MRP printed on the package of the television is 12,000. Applicable rate of GST on television is 18%. BL dispatches the stock of televisions to its distributors ordered by them on a quarterly basis. In order to promote its sales, the sales head of BEL has formulated sales promotion scheme on 1st April. Under the scheme, BEL offers a discount of 10% on television supplied to the distributor if the distributor sells 500 televisions in a quarter. The discount offered on the price at which the televisions are sold to the distributors It excluding all charges and taxes. It appoints Shah Electronics, an unrelated party as per GST law, as its distributor in Haryana on 1st April, dispatches 750 televisions on 8th April as stock for the quarter April to June. BL has sold the televisions to distributor Shah Electronics at 8,400 per television. Shah Electronics has requested BL for a special packing of the television delivered to it, for which BL has charged 1,200 per television. Shah Electronics places a purchase order of 1,000 televisions with BL for the quarter July to September. Distributor reports sales of 700 televisions for the quarter April to June and 850 for the quarter July to September. The discount policy offered by BL has explained above is also available to Shah Electronics as per the distributorship agreement. While Shah Electronics reverses the input tax credit for the quarter July to September, it has failed to reverse the input tax credit available for quarter April to June. Examine the scenario with reference to the section 15. Compute the taxable value of the television supplied by BL to Shah Electronics during the quarter April to June and July to September, assuming the rate of tax applicable is 18%. This is the question. What this question says, they're saying that there is a agreement that these people are having with whom? Binaka Electronics. BL is having agreement with their dealers. In that, what they're saying, MRP of the product is 12,000, 18% GST is there. They sell the products to their distributors at a discount, right? So they're selling, they sold the product at 8,400 per television to one of their distributors, Shah Electronics. Then there is a conditional discount that they give when, with the condition that if they reach it, okay, what is that condition they're saying? A discount of 10% on the television supplied to the distributor. If the distributor sells 500 televisions in a quarter, this is given at the beginning. So there is an agreement which says that I'm going to give you a 10% extra discount if you sell 500 units in a quarter. Now, how many units were sold by this Shah Electronics in a quarter? Okay, they sold 700 televisions for April to June, 850 for July to September. So they have met this criteria of selling 500 televisions. The question is that because they met this, they are getting a 10% discount on 8,400. Can this be reduced from the value? This is the question they're asking. What will be the value of supply? They say the product price is now to be computed for which quarter? April to June and July to September. What is the number of units sold? Now we're computing the value of supply from whom to whom? BL to Shah Electronics. So the sale of final consumer sale is not what we're computing. We're computing how much sale has been happening between them. So they're saying that Shah Electronics is basically selling 750 units for which quarter? April to June. And 1,000 televisions for July to September. See, 1,000 televisions BL for July to September. Now, the value for April to June is 8,400. 8,400. Plus, there's something called a special packing. Will I include this in the value? Yes. 15 2C says that I have to add that also. Special packing 1,200. 1,200. 1,200. 9,600. 9,600. The next question is, are they eligible for the discount? This discount is given at the time of supply or after the supply? After the supply. 15 subsection 3 clause B will apply. If the discount is given after the supply, three conditions are to be satisfied to reduce that from the value. What are the three conditions? Number one, it should be existed. Is that existed? Yes. At the time of supply? Yes. Am I able to link it to an invoice? Yes, I'm able to. Proportionate reversal of ITC. What is it they have said? They Shah Electronics reverses ITC available for quarter July to September. They're reversing. But failed to reverse for April to June. So April to June, are they allowed to take the discount? No. Here they are allowed to take the discount 8,400 into 10%, which will be 840. Can you tell me the net value? This would be 9,600 itself. This would be how much? 8,000. 760. Is that the number? So the total value would be what? This multiply with number of units. Are you guys understanding the question? So this is basically testing you on that. There was a question on Pranav. Why is the NGO subsidy reduced in the earlier question? It is. If you're asking about this was not supposed to be reduced. So that is why we are adding it back because they said the 7,600 they have derived after considering the subsidy. So non-government organization, right? NGO. So only government subsidy can be reduced. So it was already reduced. So we added it back. Okay. So these are questions. So you have a couple of more questions that you can look at on these areas. There is one more question which I would suggest you to look at from the ICA material itself. It's a good question. They've asked this question multiple times in the various segments. Say you can look at question like 16. Okay, so you just mark it somewhere that question number 16. With this understanding, you want to look at this question and answer. There's a method in which they've added back the value and all that. So you will get better clarity on it, right? Let's start with our circular discussion on these areas. Okay, so we'll just consolidate the circulars. So there are 4 5 circulars that I can touch upon together with this. And you should know that most of your theory questions, most of your practical theory questions are primarily driven by circulars. So there is a high chance that you might get these things in the examination than the very simple concepts that you are seeing it on the primary sections. So you have to be very careful about all these understanding. First one is there's a circular on sales promotion scheme. There's a circular on del credere agent. This is a circular that gives you clarity on EMI schemes. This is a circular that gives you clarity on no claim bonus. This is a circular on warranty and additional warranty area, which if we want, we can club it with the ITC chapter because that gives you a little more clarity. Then we will move to the valuation rules. That's the idea. So Circular 92 bar 2019. This circular had 4 sales promotion schemes being discussed. What I'll do is I'll try to, so if you look at our notes, when I say our notes, what I meant is my chart notes, you would find this to be split between 2 chapters. One is in supply chapter, wherein they're talking about buy one, get one free kind of schemes and free sample and gift kind of measures to improve sales. There's also volume based discounts and post supply discounts that is discussed in value of supply chapter. But the ideal thing to do would be to club all of this into one discussion because it's a recap. So let me do that. Okay, there are 4 schemes that I have mentioned here about, right? There are 4 of them. What we're going to do now is that we're going to analyze 4 different sales promotion schemes. What are their GST impact? First one is gift or free sample. Second is BOGO sales, buy one get one free kind of sales. Third is volume based discounts, and fourth is post supply discount. First is gift or free sample. In gift or free sample, which industry does this the most? Gift or free sample. All of these are sales promotion schemes. If you do this, you're going to get more sales. What is the GST impact of it is what we're going to discuss now. First question is gift of free sample is there in which industry? There's so many industry which does gift of free samples. You would find free samples to be very popular in pharma sector because all the pharma companies massively manufactures tablets, gives a lot of tablets to doctors for free. Will that be considered to be a supply? That's it. When a medical representative is giving a doctor a medicine for free. There is no consideration that is collected. If there is no consideration, it cannot be a supply unless it's a Schedule 1 activity. There are 4 activities in Schedule 1 which becomes a supply even without consideration. What is the only thing that you have to do under GST is to reverse ITC on inward supply of the inputs are blocked under 17.5H, which means whatever may be the corresponding raw material that you have purchased or corresponding input services or goods which are used for this gift of free sample needs to be reversed by you. So you all the inward supply of inputs, only inputs which are used for this gift of free sample needs to be reversed. That's primarily what you have to do. Then second, buy one get one free. Is that considered to be free sample or gift and not treated as a supply of not treated as a supply of goods or services? The answer is no. Buy one get one free, which is there in which industry? Primarily there in FMCG, primarily there in ready-mades. If you look at, if you go and buy one spectacle from Lenskart, you will get another spectacle for free. So this buy one get one free, buy one shirt get another shirt for free, these kind of schemes are very popular. Now if you analyze these schemes, you will understand that in buy one get one free kind of schemes, it is not treated as like one item is given free and you have to correspondingly reverse the credits. Rather it would be treated as, okay, buy one get one free kind of schemes are treated as supply of two items for a single price, supply of two or more goods for a single price. It can be either composite or mixed supply depending upon whether it is naturally bundled or not. One shirt, another shirt, not naturally bundled, so it will be a mixed supply. I will apply the highest rate that is applicable. If you buy one sweet box, you will get juice can for free. Again, it's a mixed supply. But do you have to reverse ITC saying that in one of the supply there is no consideration? No, no. You will consider this to be supply with the consideration only. Both of the product are having consideration. Together you have a consideration now. That's buy one, get one free. Third one, volume based discount. That's what we are discussing now in discount area. There are two type of volume based discounts they're discussing about. One is buy more, save more. I am a victim of this on a day-to-day basis. Every time I order on Swiggy, they would say that buy for another 200 rupees and you will get another 50 rupees off. And I just add some random item to get this discount. Buy more to save more. I'm buying more to save more. Buy for 10,000, get another 100 rupees off. Buy for 20,000, get 10% off. These are buy more, save more kind of offers. These discounts are given at the time of supply. When you're buying it, it is given through invoice and it can be reduced from value under 15.3A. This is something that they have clarified. It's just basically applying this existing provision that you guys are well aware of to the practical discount options that you have. Then discount upon achieving volume targets periodically. Discount upon achieving volume targets periodically are like the discount that we have seen in that BL question. What is the discount? They said that if you reach at 500 units sale minimum, I'll give you an additional discount. So this is called as discount upon achieving volume targets periodically. Now let's analyze this discount with respect to our understanding. Is it 15.3A discount or 15.3B discount? It is 15.3B discount because this is given after the supply. Now because it is given after the supply, I cannot show it in the invoice. I have to give it through a credit note. So I've written it is given through a credit note. Now, if the discount is under 15.3B, I can reduce it if how many conditions are satisfied? 3 conditions are satisfied. Now, what are the 3 conditions? One, it should be existed at the time of supply as per the agreement. Second, it should be specifically linked to an invoice. Third, it should be the recipient should proportionately reverse the ITC on the discount. They're saying that generally these discounts are existing at the time of supply. These are discounts that I promised at the beginning. So first condition is assumed to be satisfied. That's what they have generally clarified. However, 15.3b says that first condition is not enough. You need to have 2 more conditions for you to reduce it. So that's what the circular also says. It can be reduced from value if other condition under 15.3b are satisfied. Now the last one is called as post supply discount. What exactly is a post supply discount? These are discount given after the supply but does not exist at the time of supply. Can I reduce this? No, it is not satisfying the condition. Here is where you have a confusion about the documentation. So for example, I gave somebody a discount after the supply. And there's a latest clarification on this. It is not yet applicable for the exam, but there's a latest clarification. They're giving more understanding about this post supply discount. Now they're saying that if the discount is given after the supply, it was not existing. Say the distributor or the manufacturer sees that, the wholesaler sees that with the retailer or the distributor, a large part of unsold stock is available. They might ring up the distributor and say that, hey guys, you're not selling the product enough, I'm giving you an extra discount, please sell it off. This discount is not existed at the time of supply. So for discounts to be reduced, if it is given after the supply, the first condition is that it should be existed at the time of supply. Since that condition is not satisfied, it cannot be reduced from the value. However, there should be a commercial adjustment that needs to be done by way of adjusting the invoices, because even though I have given the discount, I cannot reduce the GST. That customer is not going to pay me. To reduce the value here, I might have to issue a credit note. But can this be considered to be a GST credit note? No. You might do it, you might issue a accounting credit note in your accounting software to adjust this, but I cannot call this as a GST credit note. That's the primary thought process they are trying to give you here. So they're saying that credit note might be issued. That's what I have highlighted in yellow here. Credit note might be issued as a commercial document. You cannot reduce the value just because you issue a credit note, because this discount cannot be reduced from value since condition under section 15(3)(b) is not satisfied. What condition is not satisfied? Not existed at the time of supply is not satisfied. If this discussion is clear to all of you, can I have a quick yes on the chat box, please? There are a couple of questions at the end of the chapter that you can see from ICAI material for this. Now let's move to the next circular clarification that we have. I'm going to discuss a circular on del credere agent now, which is there in supply chapter. But I feel like that's something that I can discuss now, considering that it is clubbing with something that I've already discussed. Okay, so I'm going to discuss about del credere agent, but I believe that any discussion on del credere agent requires a bit of introduction into Schedule 1, Para 3, and then you will understand it better. Now, Schedule 1, as you should be already knowing, are talking about transactions under GST, which can be, it can be supply of goods, it can be supply of services, but these can be a supply even without consideration. Primarily without receiving any consideration, the supplier will have to declare these transactions into their outward supply and then pay the GST from their pocket. The recipient would end up taking the input tax credit. Now the valuation of these transactions would also come under valuation rules, because there is no transaction value that I can derive. Why? There is no money that is being paid. There is no price or that is paid or payable here, but I still need to pay GST, so I will go to valuation rules only for this. In Schedule 1, there are 4 paras that we have, or we can say there are 4 activities which are considered to be a supply without consideration under Schedule 1. Now, the first one is supply of goods between principal, first one is permanent transfer or disposal of business asset varieties is claimed. Number 2 is distinct person transaction. Number 3 is between principal and agent supply of goods. And number 4 is importation of service without consideration uh, in the course of furtherance of business from related person or establishment outside India. These are the 4 paras that we have. If you look at para 3, you would understand it is talking about supply of goods between principal and agent not requiring consideration to be called as supply. 2 points important for us to understand here. One, they've used the word goods only, so which means para 3 is applicable only for supply of goods between principal and agent and not for supply of services. Say commission when an agent is receiving from principal, it is consideration for supply of service. Are they covered under para 3? No, because services, you can look at the note here, services between principal and agent are not covered under para 3. Hence, the supply of service will be subject to GST only if there is consideration. So, para 3 primarily talks about goods being supplied between principal and agent. Now, the second word you have to be careful here is that they've used the word between. What is the meaning of the word between? Between here means can be from by principal to agent or by agent to principal. I can have the supply of goods principal to agent or agent to principal. Why would an agent supply back to principal? We know that principal would supply to agent to further sell. Why would an agent supply back to the principal? Sometimes when we think about agent, we only think about selling agent. Sometimes the agent can be appointed for purchase of items. If you're an agent which is appointed for purchasing certain item, you would purchase and then supply back to the principal. Now, if you are somebody who's supplying, if it is supplied by principal to the agent, if it is for further supply, what transaction would be covered under para 3? Say I've written an example here. VKC is appointed an agent to sell the goods to customers. There are two transactions happening here between VKC and agent and the customer. Para 3 primarily talks about this transaction between principal and the agent. You guys understanding this? Okay. Similarly, suppose Louis Philippe has appointed an agent to procure cotton from factories. Now, factory to agent is transaction number one or supply number one. Agent to principal is supply number two. Now, this supply number two, that is between agent to principal, this is where consideration is not required for it to be called as a supply. Now, there's a clarificatory circular because there was a confusion that was around asking whether are all agents considered to be para 3 agents, because for an agent to be a para 3 agent, they should be making supply of goods between principal and agent. And most of the case, what happens when the goods are reaching the agent, it still will be under the ownership of the principal. Can that agent also be considered to be a para 3 agent? Is the primary question that we were trying to address here. Right? So they have given a clarificatory circular under circular 57 and said, I would consider only certain type of agent to be para 3 agent. What kind of an agent is considered to be para 3 agent? Those agents, there are two type of transaction that happens between principal and agent, right? Suppose I have appointed you as an agent. I'm a magazine company or a newspaper company or some kind of a pharma company or somebody. I have appointed you as an agent. I send the goods to you first. You sell to the customer. Now bill needs to be issued. There are two ways in which invoicing can be done. Only one type of invoicing will create you as a para 3 agent. How? Number one, first primary type of transaction between principal and agent goes like this. Say principal gives the goods to the agent and agent gives the goods to the customer. The bill is given by the agent, but it's in the name of the principal. Sometimes the agent will be having access to the billing software of the principal, and then agent goes into the billing software of the principal and then put up the name of the customer and then generate the invoice. In that invoice, supplier name is given as the principal name. That agent is not considered to be para 3 agent. He's only an agent for supply of services wherein he gets commission. He's not an agent for supply of goods. Now, if the agent is an agent for supply of service only, not for goods, he's not covered under para 3. However, there is a second type of agent. What happens? Principal sent the goods to the agent. Now, agent is selling the goods to the customer. At that time, the agent is giving the bill. In the bill, supplier name is given as the agent name itself. That's what is given in the circular. Para 3 is applicable only for an agent for supply of goods, not for service. An agent will be considered as an agent for supply of goods without consideration is only if invoice for further supply is issued by the agent in his own name, or invoice for the goods procured are issued to the agent by the third party in his own name. So I would recognize an agent to be para 3 agent when he is primarily a supplier of goods. If he is issuing an invoice in his own name, then the supply between him and the principal would be covered under para 3 and there will be a supply even without consideration is what they're saying. Is this clear, all of you? Okay. Now let's move to del credit agent circular. What is that the del credit agent circular talks about? Who is a del credere agent? Del credere agent and a normal agent, if you compare, you would understand. Del credere agent are somebody who basically takes the credit risk of a transaction, which means normally when the agent is selling the product to the customer and the customer doesn't pay, primarily it will be the bad debt of the principal. However, if there is a del credit agent, he takes this credit risk and ensures that he pays the consideration irrespective of whether the final customer pays or not to the principal. Thereby, the principal might have to offer a higher commission to him. As a del credit agent, if my customer delays for a long term, I have two risks. Either I know that it might be a loss for me because I am taking all the credit risk, or if he delays, I might have already paid to the principal, and which means that I might have withdrawn money from my ODN, which creates me a interest cost. Right? To compensate this, whenever there is a delay, the del credit agent will collect an extra amount from the customer, which would be an interest. Now, if at all there is an interest collected by the del credit agent, will that be included in the value of supply is the question that we are trying to ask. We know that 15(2)(d) says that any interest, late fee, penalty for delayed payment of consideration should be added to the value. Would the del credit agent's interest also will be added to the value in this particular occasion? Now, to call this as a value of supply, primarily the question that we should ask is del credit agent should have an underlying supply there, which means del credit agent should be a para 3 agent or not will determine whether there's interest to be added to the value or not. Now, the circular clarifies whether the interest collected by the del credit agent will be included in value or not. To answer that, they've said we have to ask the question whether del credit agent is a para 3 agent or not. Now, how will I know whether del credit agent is a para 3 agent or not? If the invoice is issued in the name of del credit agent, then del credit agent is a para 3 agent, which means what are the supply that happens there? Number one, supply of goods is happening from del credit agent to the customer. Supply number one. Supply number two, when principal is sending goods to the agent, that will also be a supply even without consideration. Why? Because he's a para 3 agent. So para 3 agent, when they receive goods from principal, there is no consideration required, that will become a supply. So two supplies of goods here. Number one, principal to del credit agent to the customer. Three, anyway del credit agent will be getting a higher commission. The agent will give a bill to the principal, that will be the third supply, which is supply of service. Here, if the del credit agent who is a para 3 agent receives interest, the circular says that since del credit agent is a para 3 agent for supply of goods, there is an underlying supply for this agent, which means he's supplying goods, he's getting money delayed, so he's collecting interest. Will be treated as what interest? Interest on delayed payment of consideration. Interest will be added to the value of supply under section 15(2)(d) is what they're saying. Are you guys understanding this? Yeah. Now look at the second part. What if this particular agent is not a para 3 agent, which means what? The bill to the customer is issued by the principal directly. So the agent is only providing services to the principal and collecting commission, and the supply of goods is happening directly from the principal to the recipient. But why? He's not a para 3 agent. So when he is getting goods from the principal, it will not be considered to be, when he is getting goods from the principal, it will not be considered to be a supply because he is not covered under para 3. He is not giving bill to the customer. So what are the supply that happens? I have written that particular understanding here. What are the supply that happens? Following supplies take place in such cases. Number one, supply of goods by principal directly to the recipient. Agency services by direct del credit agent to the principal. Loan services by del credit agent to the recipient. Why? In this case also, who's taking the credit risk? It is the del credit agent who's taking the credit risk. Therefore, since del credit agent is taking the credit risk here, he's only getting interest. Can I add this interest to the value of supply of the principal? No, principal is not even getting that particular interest. Can I add it to the value of supply of the del credit agent? No, del credit agent is not supplying goods. So there is no underlying supply from del credit agent to the customer here. Because there is no underlying supply of goods by del credit agent to the customer here, this interest will be treated as a consideration for a separate supply. What supply? It will be as if the del credit agent has given a transaction based consumer loan to the customer on behalf of customer, like Bajaj Finserv. On behalf of the customer, they paid to the supplier. Then later you are paying with interest. This interest will be considered to be a interest on an independent loan transaction. Hence, credit facility here is an independent activity. Interest is not included in the value of goods. Whenever interest is not an interest on delayed payment of consideration and not included in value of goods or service, that interest will be treated as a exempted service. Interest on loans and advances are exempt. So the notification 12/2017 would be attracted. You guys understanding this? And what we can do is, since we are now discussing about principal and agent, we can also go to the valuation rule and then see when para 3 is applied, how will I compute the value? So instead of repeating it, since you have asked for me to repeat, instead of repeating it, how about I show you an example so you understand this better? Look at this. Okay, this will give you an understanding of the entire aspect. Let's assume there are three parties here: Samsung, Mr. Raju, and a customer. Samsung is the principal, Raju is the agent, and customer is the one who is buying the product from Raju. Let's assume scenario number one: Raju is a para 3 agent, which means that Raju gives the bill to the customer in his own name. Samsung is first sending the TV to Raju. Say it's 50,000 rupees. We don't know the value. We can compute the value as open market value, because even if there is no consideration, this will become a supply, because Mr. Raju is covered under para 3. Supply of goods between Samsung and Raju is a supply even without consideration. Second, Raju is giving this goods to customer as a credit sale. So Raju is basically collecting 50,000 plus 5,000 rupees interest from the customer. Then Samsung is going to pay, say, 20% commission on the sale, which is 50,000 into 20%. 10,000 rupees is paid by Samsung to Raju as commission. So what are the transaction happens here? How many outward supply for Raju here? Two outward supply. Number one, outward supply of goods to customer, outward supply of agency services to Samsung. I hope this is clear to all of you. Now, question here is that how many inward supply Raju has? One inward supply. Even if there is no consideration, Samsung giving TV to Raju will become para 3 supply. Samsung will pay GST and Raju will take the credit. Now, question that we are addressing in this circular is that now Raju is getting 5,000 rupees extra from the customer here. Will that be included in the value? Yes. Look at Raju is making supply of goods to customer. This interest would be an interest on delayed payment of consideration and primarily should be covered under 15(2)(d). Understanding? However, if the same transaction is happening wherein he's not a para 3 agent, same transaction, no difference, how will it work? Which means Samsung is giving TV to Raju, Raju is selling the TV to customer. However, the bill is given by Samsung directly to customer. So here supplier of goods is Samsung to customer. So activity chain is same. Samsung transferring TV to Raju, not a supply. Why? He's not a para 3 agent, no consideration, not a supply. Delivery challan possibly. Then Raju would give this TV to customer. Would it become a supply of goods by Raju to customer? No. Supply of goods is done by Samsung to customer, say 50,000 directly invoice issued. Samsung will have an outward tax liability on this invoice, right? In the earlier case, Samsung will have outward supply on Samsung's invoice to Raju. Here, Samsung's invoice to customer, right? Now, Raju will still get 10,000 rupees, 20% commission. Raju will give an invoice to Samsung. Now, Raju is getting 55,000 rupees from the customer because it was a credit sale. Raju would have promised the payment to Samsung because he's a credere agent. Question is this: the 5,000 that extra received by Raju, will it be considered to be added to the value of supply of Samsung? No, Samsung is not getting this 5,000. Now, question is this: how many outward supply by Raju here? Outward supply of services by Raju to Samsung getting 20% commission. Second supply is there by Raju, which is supply of loan facility to customer getting 5,000 rupees interest. Question to you guys would be this: should this 5,000 be a taxable supply or an exempt supply? It's an exempt supply because I cannot call this as a consideration for delayed payment of consideration, right? This would be rather like an independent activity of giving loan will be exempt. This is what is the consideration. This is the understanding that they're giving. Is this clear, all of you? Can I have a quick yes if this is clear? Now, what we have to do is we have to club this with our valuation rules and then understand how do you value the transaction which are under para 3. So basically, your valuation rules, okay, your discussion of valuation rules, it's very easy to discuss. I have summarized the valuation rules separately that I can show you. But from rule 27 onwards, rule 27, 28 now has two sub rules. 29, 30, 31 will be considered to be the first segment of valuation rules from 27 to 31, wherein it tells you in different scenarios how do you determine value when you cannot apply section 15, or it is said that you have to apply these valuation rules only. So CGST valuation rule starts from 27 till 31 is one segment. In that, 29 talks about how do you determine value when the supply is happening between principal and agent. Why? Because para 3, if the agent happen to be a para 3 agent, there is no consideration required. If there is no consideration, how do I determine the value? It is given here. Shall we look at it? What is the method in which I'll determine the value? Okay. Now, carefully look at the rank in which they have given the value. Rank number one, in most of the cases, rank number one remain the same, which is open market value. Say when Samsung is giving TV to Raju and there is no consideration, and Samsung has to pay taxes, no? Samsung needs to take what is the market value of this TV and then apply, raise an invoice and then pay the GST accordingly. That will be taken as credit by Raju. Now, if that's not available, or at the option of the supplier, now I'm giving an option for Samsung. What is the option? If the goods are intended for further supply, what is that Raju is going to do with this particular goods is the question. If it is meant for further supply, Raju is going to sell this. Then the value of supply by Samsung to Raju can be taken as 90% of price charged by the recipient to his customer, not being related person for the supply of goods of like kind and quality. If on 1st January I'm sending TV to Raju, I'm Samsung. On 1st January, there would have been sale that has happened by Raju to customer of that product. That's why I'm using the word like a kind and quality, because this product Raju is yet to sell the product that I'm sending today. On 1st January, I'm sending certain TV. But there is similar TV that is being sold by Raju on the same day, maybe same model and previous product I already sent them. That price, I'll take 90% as my value at my option. So open market value and this, whichever is beneficial for me, I'll be able to take that particular value. If that's also not possible, right? When Raju's further sale price is taken, I have to take further sale price to an unrelated customer and take the 90% of that. If that's also not available, I can go for rule 30 and 31. What is rule 30? Rule 30 says 110% of cost of production or manufacture, or cost of acquisition of such goods, or cost of provision of such services. Cost based value. If I don't know what is the market value, I'm not able to take the further supply value and all that, I can go for what is the cost of production, take 110% as the value. If that's also not available, I can go to rule 31, which I would generally call as best judgment method or residual method. You go to the officer, surrender to him, say that I'm not able to determine value, please help me. I'll determine the value based on the general principle under section 15. That's section rule 31. Now let's go and then look at a question wherein they're clubbing all of this. Okay, for that matter, I'm trying to pick up a question which is from my question banks, not from the ICAI material. It's a simple question, so you should be able to take this. It's an MCQ question, right? So let's see whether you are able to get the answers correct. I'll read the question. I'll give you 4 options and then you tell me what is the correct answer. Dhumkedu, registered under GST in Virar, Maharashtra, is appointed as credere agent by Big Bang Limited. He sells shoes to his customers locally within the same state. Big Bang Limited is also registered under GST in Maharashtra. Okay, both of them are in Maharashtra. Dhumkedu was a credere agent. During the current financial year, Big Bang Limited supplied taxable goods worth 9.5 crores, whose open market value is 9.82. From its Navi Mumbai unit to Dhumkedu. Dhumkedu has further sold these goods for 10.1 crores by raising invoice using his own GST number. Now you tell me, is Dhumkedu a para 3 agent? Can I have that yes or no answer on the chat box? Is he a para 3 agent? Of course, he's a para 3 agent, primarily because issuing invoice under his own name, right? Okay. Coming back to, I'm reading further. Dhumketu has received a commission of 65 lakh from Big Bang Limited during the year and has guaranteed payment of value of such goods from customers to Big Bang Limited. Dhumketu has also provided financial assistance in the form of larger credit period to the customers, on which he has also earned an interest of 25 lakhs. Compute the value of supply of Big Bang Limited at Dhumketu in the current financial year, assuming that both of them wish to adopt a minimum value of supply to the extent possible. Big Bang 9.9, 9.09, Dhumketu 11, Big Bang 10.05, Dhumketu 10.85, Big Bang 10.15 crores, Dhumketu 10.85, Big Bang 10.15, Dhumketu 75 lakhs. Kind of a 2 mark MCQ question. Give me the answer. So how do I determine the value? So I need to determine value for two transactions. One Big Bang to Dhumketu. That is the value of supply for Big Bang. And Dhumketu's value also I need to determine in total. So first let's look at Big Bang to Dhumketu. So if you look at Big Bang to Dhumketu, you would understand that it's a para 3 transaction. Now to determine the value, I should adopt which rule? Rule 29. Rule 29 says what? I have rank number 1, rank number 2. Rank number 1 is what? Open market value. What is open market value in this question? It's given as 9.82, but they wish to take the least value they have mentioned, right? So rank number 2 says that further supply value, I can take 90% of that. Did they give you further supply value? Yes. They said they solve the further supply these goods for 10.1. If I take 90% of that, it is 9.09. I have to adopt a 9.82 rank number 1, or at my option 9.09, which is the least value 9.09. So I would have adopted 9.09 for Big Bang. So if you look at this question, since it's an MCQ, you don't have to further analyze. You can save all the time because 9.09 is matching. So you would have picked A as the option and then gone. Now let's go ahead and then analyze whether Dhumketu's 11 crore is correct or not. Now, Dhumketu is further supplying to the customer for what value? They're further supplying to the customer for how much value is that they're supplying? They're supplying to the customer for what? 10.1, right? 10.1 would be the primary supply of goods value to the customer. Plus, he is also collecting interest from the customer, 25 lakhs. Will it be added to the value? Yes. Why? He is a para 3 agent, and we have learned that para 3 agent, when he is supplying to the customer and collecting interest, it will be covered under 15(2)(d). So I would add this to the value, which makes the value to be what? 10.1 plus 25. That will be the value of supply of goods. Then he's also receiving commission, which is also considered to be his outward supply. There are two outward supply that he has. One, supply of goods to the customer, and supply of services to the principal. That value is how much? 65 lakhs. So 65 plus 25 is 90, plus 1.1 is 11 crore. That is the answer to the first answer to the question, which is the first option is the correct answer. If this is clear to all of you, the computation, can I have a quick yes? Okay, perfect then. Okay, if you've understood, great. Now what we'll do is that we will move to the next circular clarification that I wanted to discuss, which is again from supply chapter, which is on no claim bonus. Look at the circular clarification that we have. The question that we have here is no claim bonus offered by insurance company to the insured treated as a consideration for services provided by insured to the insurance company, or it should it be treated as a discount given at the time of supply? This is the question that we're asking. What is primarily a no claim bonus? That will give you overall understanding of it. No claim bonuses are nothing but the bonus that is provided by insurance company when somebody is not claiming for a particular year. So there are two questions that we are trying to answer with it. Number one, is no claim bonus considered as a consideration for services provided by insured to the insurance company? Number two, can this no claim bonus be reduced from value as a discount under 15 subsection 3? Say I have taken a car insurance for 30,000 rupees. 1 year I made no claim. The insurance company is offering me 5,000 no claim bonus in the next year because I didn't claim. Now the confusion primarily comes because of schedule 2 para 5e. Schedule 2 section 7 subsection 1 capital A talks about deeming certain activities as supply of goods or supply of service as per schedule 2. So there are activities which are confusing whether it's goods or service. As per Schedule 2, GST has already fixed a certain activity to be goods, certain activity to be services. That's what primary purpose of Schedule 2. In Schedule 2, you have something called as Para 5E, which says that there is one, all the activities in para 5 are deemed to be supply of service. In that 5 we talks about a particular transaction called agreeing to an obligation to refrain from an act, to tolerate an act or situation, or to do an act. There's a detailed circular on liquidated damages which clubs on this. So they're saying that if you have an agreement wherein you agree that you will not provide certain services, or you refrain from doing something, or you tolerate an act or situation, it will be treated as a supply of service. So non-competency contract, I say that I will not provide services to any other company in my area, you give me this much of amount, could actually be considered to be a supply of service. They're asking no claim bonus also is for not making claim, which is refraining from doing an activity. So can no claim bonus be treated as the insured, the one who has taken insurance, the person, the customer didn't make a claim, so the insurance company is paying them no claim bonus. So customer is providing a service to the insurance company, can it be treated as a service by insured to the insurance company? The clarification says no, because to call something as a supply of service, there's a very important wording here called as agreeing to an obligation. Here there is no obligation, right? So can the insurance company reject my claim? If I take an insurance and then go and then make a claim, can my insurance company say that no, I'll not process your claim because I was going to pay you insurance, no claim bonus at the end of the year. So you are not supposed to make a claim. Then why are you taking the claim first of all? Why are you taking the insurance first of all? So there is no obligation. That obligation part is missing here. So circular clarifies that there is no obligation from the part of the insured not to claim insurance because they receive no claim bonus at the end of the year. Therefore, the no claim bonus is not a consideration for refraining from claiming insurance. It's not considered as a supply. Then what is it? No claim bonus by insurance company to the insured as a deduction from premium can be considered as a discount. Now the next question is it a discount given at the time of supply or after the supply? Normally, how is it done? Is it like this year I buy an insurance, next year they give me a credit note and then reduce this, give me back and no claim bonus? No. The no claim bonus is primarily a discount given for the next year premium when it is given at the time of issuing invoice for the next year. So these are discounts that is given at the time of supply. In the invoice it is mentioned, it can be reduced to from value. Look at an example that I've drafted for you to analyze this. I'll read the question for you so that you can easily analyze this. Care Health, an insurance company providing health insurance, has collected a renewal premium from its customer, Mr. Rahim. Compute the taxable value and the GST payable. Gross premium is 25,000. There is an add-on consumables coverage of 3,000. Health checkup 1,000. Critical illness coverage 1,000. No claim bonus from the previous year 5,000. Commission paid to the insurance agent on the gross premium 2,500. Accidental insurance cover provided free of cost as a festive offer 1,000. Care Health argues that no claim bonus should be treated as discount under GST and should be reduced from the value. However, department treats the same as separate supply by Mr. Rahim to Care Health. Is the treatment of department tenable under the law? No. So how do you compute the value? Gross premium 25,000 plus 3,000 health checkup, critical coverage, all of this should be added, kind of composite supply. Can I reduce the no claim bonus? Yes. Commission paid to the insurance agent on the gross premium. Should I add it to the value of supply of the insurance service provided by Care Health to the customer? No. Why? This 2,500 is already covered under the gross premium, right? Commissions are paid from by the insurance company to the insurance agent, and it is not something that I have to additionally bill it to the customer. It's already covered under gross premium, so I'll not add it up. Should I add this accidental cover free of cost? No, it is not payable, so I'll not add. So my computation would be like this: 25,000 plus all the add-ons I will add minus the no claim bonus of 5,000, which will give you 25,000 as the net taxable value, right? So GST on 18% would be 4,500. Is this clear, all of you? Can I have a quick yes if this computation is clear? If you have any confusion, quickly you can ask. I'm saying that every circular, you should read it as if they're going to test this in the exam. So the moment you read a circular, look at what kind of questions can come from that. If this is clear, we'll move to the next discussion. I'm going to discuss where can I find these circulars? These are there in ICA material. That's the entire circular stuff is there in the ICA material itself. Okay, so I'm just basically discussing from those material only if you're asking, right? If you want to find this from the website, you will find this from CBIC website itself. You will find that. Next, okay. Now there's an interesting circular that is there in your value supply chapter that I'm going to discuss. It's a little bit tricky. If you've not gone through this, it'll slightly confuse you. I can explain this if you want some example, understanding, and all that. I can further discuss, but be with me to understand the primary structure. Clarification on incentive. I'm just going through the circular. I've given a structured chart notes to understand this. Clarification on incentive by METI. So METI is a short form of a department of government called Ministry of Electronics and Information Technology. Ministry of Electronics and Information Technology is called as ME, Electronics and Information Technology is why I don't know how that they picked up the name, but METI is called Ministry of Electronics and Information Technology, government department. They are giving an incentive to acquiring bank for low value rupee, debit and beam UPI transaction. They're saying that this incentive given by METI, the government department, to the acquiring bank are in the nature of subsidy by government and it is not to be included in the value. This is the clarification that they have. Now, you might have some idea about the acquiring bank and transactions. You might not have. So I'll spare a little bit of time to get this understanding correctly in your head. You will find this in value of supply chapter in your IC material. What it says. Say, doesn't why am I spending time is that because there's a small amendment here, further clarification. So I could just give you clarity on that. I'm giving you a little bit of ex-banker gyan here. I know that that is not required for you to learn GST, but pardon me for that extra bit of understanding. We're gonna I'm asking apology because if I over explain something, I'm losing on explaining an additional topic. So you have to be aware of that. ICICI Bank would have issued a lot of, so how acquiring bank works, what is this meeting incentive and MDR and commissions. I'll give you a very simple understanding. Say every bank, if you go, if you're a merchant, you can get a post machine, right? Or you can get a scanner machine wherein people will scan and then you might get a sound box. You'll get the money received in your bank account. You know that all the banks which are basically issuing this post machine, swiping machine, is charging a commission from the customer, right? Effectively what happens is that if the commission amount is really high, the customer would be very hesitant to allow the, when I say customer, I mean merchant. Whose customer? Bank's customer. These merchants would be very hesitant to accept digital transaction because they're losing a money when they accept payments using any of these, like a post machine or anything like that, right? Or payment gateway and things like that. So the bank issuing this post machines are called as acquiring bank, right? Now, government wants to promote digital transaction. Now, against this post machine, how will the payment is done? There are people who will come and then make a swiping of cards, or they will scan QR code and then make the payment, right? Cards and UPI are being used in the post machine. So the banks which are issuing these cards are called as issuing bank, and those banks which was issued machines or payment gateways to acquire these transactions are called as acquiring banks. That's how the banking terms are being defined. What happens is that when the cards are being swiped in this machine, there's a charge that is paid by the bank to the charge is being paid by the merchant to the bank. Which bank? Acquiring bank, because acquiring bank has an interchange expense. So they will, I'm not explaining about the whole that. So I'm saying that there's a charge that is paid by the merchant to the acquiring bank. So what effectively happens, people would, the banker would, what is that the merchant would do? Merchant sometimes will ask the customer to bear this 1% extra. They would say, no, if you go with the credit card, they say, no, credit card, I'll charge extra 1%. Now the government says that because of this charges, people are not doing transactions, right? There are multiple ways in which the government is trying to help exploring or help the digital transaction promotion in India. How the government is helping. Now, one, GST department is coming into the picture. What does the GST department say? Normally, when the banks are charging an administrative charge, like a processing fee or any kind of charges from anyone, there is GST applicability on it. So they said, I'll divide the whole digital transaction into two categories. One, up to rupees 2000, above 2000. So first thing, GST department came and said, promote digital transaction in India. How that digital transaction is promoted? GST department said, any transaction that happens up to rupees 2000 in these post machines, bank, when you are collecting charges from the merchant, don't charge GST. So that charges will come down first. But this is available for only up to 2000 rupees transaction. First benefit that is given by, offered by whom? GST department. Exemption is given. So that's why in the exemption chapter, you would find that there's a wording, but in debit credit transaction or payment charge transaction up to rupees 2000, acquiring charges will be exempted from GST. You would have seen that there, 2000 rupees transaction, no GST, right? Second, there is two type of card networks available. Like, you know that when the card is issued to you, debit card, credit card, you would find on the sides that there is MasterCard being a card network provider, or it could be a Visa card, it could be Rupee card, right? What's special about Visa, Diners Club, MasterCard, and Rupee? Which one is Indian here? Rupee is Indian. NPCI, like constituted by RBI itself. So it's our child, right? So they said that's the easiest, they have the least charges for these kind of transactions. So what they have decided, they said we will further promote Rupee and UPI transaction. How? They said first transaction, what they have done, they said all transaction, all your credit card, debit card, everything, you wouldn't have a problem. You wouldn't have, who, the bank will not charge GST on top of it. So let me take a transaction so that you understand this. Say there is 1000 rupees swiping that you have done. The 1000 rupees will not go to the merchant's bank account. The bank is charging 1% out of it, which is 10 rupees. The bank will not charge 10 plus GST. They'll just charge 10 rupees. This is the primary thing that happens with up to 2000 rupees transaction for debit, credit card, everything, right? Now, government says that I wanted to further promote Rupee and NPCI transactions like UPI, right? Beam UPI, Rupee, these payments, if you use, I wanted to further help you. What is it? They told the banks, hey, banks, do not even collect any commission from the merchants. The 10 rupees itself, not there. Up to rupees 2000, if the transaction is happening for Rupee debit card and Bheem UPI, only these two, right? If you're using these two to make payment, all the UPIs is coming through the UPI channel of RBI, plus Rupee debit card, if you use, both of them are NPCI transaction. If you do an NPCI transaction, what is that the government has said? This is done by whom? This is not GST department. This is saying whom? MeitY is coming and saying that, hey, banks, no 10 rupees charge also. If they do a transaction like this, give the credit of how much? 1000 rupees paid by you. The merchant should get credit of how much? 1000 itself. Now, who's crying now? Who's crying out loud? The banks are crying out loud saying that, hey, what about my 10 rupees? I have some expenses about this. Are you guys understanding? So they are losing 10 rupees. Now, MeitY said, no worries. Budget, I have allocated funds for you. That 10 rupees, I will give you as a subsidy. Right? I'll give you as an incentive. They have not used the word subsidy. They said, I'll give you as an incentive. Whatever 10 rupees you were supposed to collect from the merchant, I'm giving you a subsidy of 10 rupees and knock off. Are you guys with me? Question is this, when MeitY is paying this 10 rupees to the banks as an incentive, will that be subject to GST? No. It is a direct subsidy. Reducing this 10 rupees minus 10 rupees, the value will become 0. It is not taxable. This is what is understanding. Is something, is that clicking for you? If you have not read this and understood this, is it still clicking? Okay, what I'm saying, is that making sense to you? Okay, so look at it. I've written it carefully. I said the commission that is charged from the merchant by the bank is called as MDR commission. They're saying there are two benefits that is available. If there is RuPay debit card or Beam UPI, up to rupees 2000, there is no commission at all. But whatever commission is lost by the government, lost by the bank, there is a incentive that is given. That incentive will be treated as a direct subsidy by government. It is not taxable. Now, apart from that, there is a GST exemption that is available, wherein any debit or credit card transaction up to rupees 2000, GST on these charges will be exempted. These are the two benefits that is available. Right? Now, the next question is that who gets this? These commissions or these incentives are actually given by Meiti to the bank. Now, sometimes what happens, like say, if you open your Google Pay account, okay, Google Pay is also UPI, right? Google Pay is basically using the benefit of some banks. Google Pay is able to do this UPI transaction by using, so if you go to your Google Pay, you create a virtual ID, UPI ID, we call it. You would have had ICICI Bank on the side of it or Axis Bank on the side of it. So Axis Bank and ICICI banks are the ones who are getting the subsidies when somebody is using Google Pay and then paying this 1,000 rupees to the merchant, right? Now Google Pay will ask what? Google Pay will say that, hey, I want some share of this, incentive because I'm losing the money because I structure the whole transaction. So what happens? Sometimes what happens is that NPCI scheme itself says that sometimes the incentives are shared by acquiring banks to issuing banks as a part of NPCI arrangement, or PSPs, payment service providers, or UPI apps like Google Pay, etc. So it is shared between acquiring bank to issuing banks or payment service providers like UPI apps. Up to this is part of NPCI's incentive plan itself. Further sharing is also there. So these incentive being shared is also, these are in the nature of subsidy from government. It will not be taxable. Up to Google Pay, it is not taxable. Say acquiring bank is the one who, the merchant's bank. Merchant bank is giving to UPI's bank, which is the bank which is paying the money. So you paid using Federal Bank. The merchant had SBI. SBI got the commission as incentive. SBI shared it to Federal Bank. Federal Bank shared it to UPI, Google Pay. Up to this, no sharing will be subject to GST. Now, this Google Pay might share this to other service providers. They might have startups who are working towards Google Pay integrated in their platform and all that. These are not covered by NPCI program. So further sharing of incentive by PSP to third party app providers, right? These are business agreements. When they share this, these will be considered to be a payment towards some services that is being provided. This will be taxable. So up to PSPs, up to your UPI apps exempted. There are integrated platforms who will get further commissions. They are not considered to be exempted, or they are considered to be taxable. These are business agreements. This is the circular clarification. Is that clear, all of you? Are you able to make some sense out of it? So that's an amendment. So these amendments are very important. So if at all they want to confuse you and then test, they can do that. Can I have a quick yes from all of you so that I understand that you're with me on this? Yeah. If you have any further confusion at the end, you can ask. Now let's move to valuation rules, and how am I going to test you or discuss the valuation rules? I'm going to show you, sir, chart for you to understand this. look at the look at the valuation rule summary. I'll just quickly take you through this. This is a very easy discussion. Just one chart, you will be able to remember the whole structure. I'm going to read you through the chart and then we will look at. There is Rule 28 has an amendment which is on corporate guarantee. Not a very recent amendment, but we will look at that separate. Rule 27, 28, 29, and we can say other. 27 is applicable to determine value when it is a case of an exchange. 28 is when it is distinct person and related person transaction. 29 is something we've already discussed, which is para 3. 30 talks about 110% of cost or cost of production or cost of acquisition or cost of service. 31 says best judgment. You go and then, surrender to the assessing officer. He'll help you to determine value. Then if it doesn't make any sense to go for 110% of cost as a valuation for services in some cases, so they give an option. For services, you have an option to skip 30 and then go to 31. Otherwise, you have to sequentially move in the order and then determine the value. First, what is value under section under CGST valuation rule 27? You will apply when it is a case of an exchange. An exchange says what? First, if you are providing the product for an exchange, say I'm buying an iPhone with an old iPhone in exchange. Rank number 1, you look at the open market value of the primary product. If that's not available, rank 1, rank 2, rank 3, rank 4 means if one value is not available, I'll go to the next in that direction. Rank 2, open market value of non-monetary consideration plus value in money. Rank number 3, like, kind, and quality. LKQ is another method in which you will value. You will look at a similar product and then look at the value. If that's also not possible, look at rule 30, 31 value. For the non-monetary consideration, add consideration in terms of money there. Rule 28 says distinct person, related person value. This will be a clean case. Rank number 1, open market value not available. Rank number 2, like, kind, and quality. Rank number 3, rule 30 and 31. There are two additional points that you have to remember here. Number 1, if the product is meant for further supply, exactly like the one that we have done for agent, it says 90% of further supply value to an unrelated person can be taken at the option of the supplier. So this creates an additional option for you to get a lower value, which creates an exam question in that order. Then if the recipient takes full ITC, it says that value in the invoice will be deemed to be the open market value. Tested in multiple cases. You have to be always careful about this point. Okay, let me come back into the screen and then explain you further. Okay, let's look at these two segments with some examples. I'll give you an example case for this, which will be very easy for you to look at. Say, first, how do you determine value in case of an exchange? Say, a supplier has given a mobile phone, product number 1, to the recipient, and a recipient has given 50,000 plus a product number 2, another mobile phone, old mobile phone. How will I compute the value of this supply for supplier to recipient, product number 1? How do I determine value for product number 1? That's what we are trying to determine here. Rank number 1 says that if you have open market value for product number 1, that's what you will take. This is how most cases that happens. Today you go to Amazon, Flipkart, and all these platforms, you can buy the product for a exchange. And how they determine the value, they look at what is the open market value of this product. Otherwise, there will be a value that is fixed. That is the value that they will apply GST. Then you reduce the exchange price and then pay the next net amount. So they basically charge from you what? Open market value itself. It was not available, NA, not available. That's when I'll go to rank number 2. What is rank number 2 says? Open market value of non-monetary consideration plus money value. Say, look at the goods that you have given in exchange. There will be some kind of a second-hand value for that. You take that value. Let's assume that value happened to be, say, open market value of the product 1 is 60,000. That's not available. Then what do? You take open market value of product 2. Say the old mobile phone was 15,000 in value plus 50,000 is the money value that you have received. So 65,000 will act as a value of supply. Then rank number 3, which says If I don't have rank number one, rank number two, then I look at a similar product. I don't know what is the open market value of product number one, but I know there is a product number three which is like product number one, and I'll take that open market value. Say the product number three is valued at, like I've written here, rank number. The product three is similar to product one, open market value 62,000. I'll take that. That is also not available. Then what should I do? I will look at what is the best judgment, or look at the cost of product 2, that non-monetary consideration. Use rule 3031 for this product number 2 and add 50,000 to it. Rule 3031 I have taken for product number 2 happen to be, say, cost of this product, I gave it on exchange is 5,000. 110% of 5,000 is 5,500. I'll take that plus 50,000. 55,500 would be the value. That is also not available. I'll look at what is the best judgment value for product number 2, which is 7,500, say for example. I'll add 50,000 to it. So always 50,000 plus I will do extra efforts for that non-monetary consideration. This is how I'll determine the value. If this is clear to all of you, you can just put a yes on the chat box so I can take you through a question. Look at the question here. Dev Enterprises is supplier of water coolers. Dev Enterprises supplied water coolers to an unrelated party, Vimal Traders, for consideration of rupees 2,95,000. Vimal Traders also gave some material to Dev Enterprises, valuing rupees 10,000 as consideration for such a supply. At the same time, Dev Enterprises has supplied same goods to another unrelated person at a price of 2,97,360, inclusive of GST of 18%. You are required to determine value of goods supplied by Dev Enterprises to Vimal Traders. What's the problem here? I'm giving price is not the whole consideration for the supply. I'm providing water coolers, right, to an unrelated person. Including GST, the consideration was 2,95,000. They also gave some material valuing 10,000 as consideration for such supply. Okay, so I'm getting some other value also. Okay, and Dev Enterprises has supplied same goods to another unrelated person at the price of 297,360. So which means that I have an open market value. So rank number one for this transaction would be open market value, which would be how much? 297,360, which is inclusive of GST. So into 100 divided by 118. So what will be the value that you will get? 252,000 will be the value of open market value. Are you guys understanding? That will be taken as the value. That is rank number one. If that's not available, what would be your answer if price of 297,360 is not available at the time of supply of goods to Vimal Traders? If that is not available, then what should I do? I should do the second one. What is that second one? Which is what is the money, like what is that the consideration that you have received, right? You have received 295, right? Inclusive of GST consideration, plus what is the money value of the other consideration? What will be that? It is 295 into, I have to remove GST from 295. 295 into 100 divided by 118 would be 2,50,000, plus this 10,000 monetary value of non-monetary consideration will give you 2,60,000 as value. I hope this is clear to all of you. This is how they draft a question on 27. Now let's look at what is 28. 28 is applicable when the supply is happening between related person or distinct person. Both of them are covered under para 2 of schedule 1. Para 2 schedule 1 says that if the supply is between distinct person or related person, it's a supply even without consideration. Isn't it? It says like that. It's a supply even without consideration. Now, without consideration, if it's a supply, how do I determine value? Apply rule 28 is what they're saying, right? Also, even if there is consideration, we know that if the supply is happening between related person, I cannot apply section 15. I have to go to valuation rules anyway. So two ways. When there is no consideration and becomes a supply, I apply rule 28. When it is between related person and I know that there is a consideration, but I cannot adopt it because section 15 would fail, right? Section 15 says it should not be between related person. This is a very important point for you to remember. In such cases, I would adopt rule 28. Distinct person means what? Under the same PAN, if I have one more registration, I would call that as distinct person. So in GST, I have to take state-wise registration, right? So if I have one branch in Kerala, one branch in Tamil Nadu, I will have two GST number. These two branches would be called as distinct person. Stock transfer will become a supply without consideration. In Tamil Nadu itself, I have one branch in Chennai, one branch in Coimbatore. If I need only one registration. If I have only one registration, one will be principal place of business, other will be additional place of business. However, sometimes what happens, I will require one registration, I will voluntarily obtain a second registration. In that case also, this would be considered to be distinct person. So look at it. In distinct person, the value would be under Rule 28. And Rule 28 says what? I've written an example for you to look at. A supplier branch number 1 in Chennai, having a GST number, has another branch in Bangalore, have a separate GST number under the same pan of Mr. Raju. On 1st January 2024, a product named Product Q was transferred, stock transferred 1000 units from Chennai to Bangalore. No consideration charged. Right? How will I determine the value? That's a question that we are trying to ask here, right? Say in the bill that is issued, there is no consideration, but there is an invoice that needs to be issued, right? What value would I adopt? This will be under Rule 28. Rule 28 goes in the same order of the primary understanding, one open market value, if not like, kind, and quality, then Rule 30, 31. But at the option, there are two options available. Number one, if it's meant for further supply, I have an option to go for another value. Or I can take a deemed open market value concept if the recipient is eligible for full ITC. No impact kind of a scenario. That's what is given here. I've written an example for you to understand. The primary rank number 1. Look at open market value of product Q. Let's assume product Q is sold to the customers on 1st January from branch 1 at 100 per unit. 100 per unit into 1000 units, 1 lakh will be taken as the open market value. If that is not available, I should look at, is there any similar product than product Q which I can adopt? Rank number 2 is product Z is there, which is similar to product Q, and it is sold at 92 per unit on 1st of January 2024. Then value of like, kind, and quality, I can take 92 into 1000. 92,000 can be taken as the value. That is also not available. I can take 110% of cost of producing this product Q, or I can look at the best judgment assessment for product Q. This is a clean case that I have. Now there are two additional options that is available. What are the options that is available? Now there is a deemed open market value concept. When will I apply deemed open market value? They're saying that even if you have consideration, or if you have determined a value in the invoice, I can take that value that you mentioned in the invoice as the open market value when your recipient is eligible for 100% ITC. So always look at, if the Bangalore branch, if the tax is paid by Chennai branch, is the Bangalore branch eligible to take full input tax credit? If the answer happened to be yes, then I should adopt what? I should adopt whatever is declared in the invoice. Say 80,000 was declared as the value in the invoice, will be deemed to be the open market value. That's the option that I have. So sometimes in question, they'll give you some concept for deemed open market value. If recipient is eligible for full ITC, then invoice value declared will be considered to be the open market value. Then apart from this, at the option, I have the same structure for an agent. That is what is the option that is available. Assume branch 2, that is Bangalore branch, sells all the products sent by Chennai branch to an unrelated person. Sale price on 1st January for further supply of like product Q is 105 rupees. Then what I can do? I can look at 105 into 90%, which would be 94.5 rupees into 1000 units, 94,500. This at the option, I can either go for, say, this, whatever I've given in this box will be segment 1. I can call it a segment 1. This, or I can compare it with the 94,500. These two, whichever is beneficial, I can take. Is there understanding, everyone? Is it clear to all of you? Good to go with the question? Look at the question on the screen. Let's read this up. Rastagi and Company manufactures customized product at its unit situated in Madhya Pradesh. Cost of production of Rastagi and Company for 1000 units is 20 lakh. These products requires further processing before sale, and for this purpose, products are transferred from Madhya Pradesh unit to its another unit in Himachal Pradesh. Value declared on the invoice for such a transfer is cost of production of such product. Okay, their cost of production is 20 lakh. That's what is declared in the invoice. Himachal Pradesh unit, apart from processing its own product, engages in processing similar products of other persons who supply the product of same kind and quality. Thereafter, Himachal Pradesh unit sells these processed product to wholesalers. There are no factories in the neighboring area which are engaged in same business as Himachal Pradesh unit. Okay, so I don't have something to compare as an open market value. 1,000 units of products of same kind and quality are supplied to Himachal Pradesh unit at the time when goods are sent by Madhya Pradesh unit by another manufacturer located in Himachal Pradesh. Ex-factory price of such goods is 19 lakhs. Himachal Pradesh unit of Rastagi and company is eligible for full ITC. Determine the value of 1,000 products supplied by Rastagi and company to its Himachal Pradesh unit. They have given you, okay, so let's analyze the rank here. Rank number one, open market value. Is that available? Not available. Rank number two, like, kind and quality. Is that available? Yes. That is 19 lakh. But here you have to look at, they have declared in the invoice 20 lakh as the value. Is the recipient eligible for full ITC? Yes. If the recipient is eligible for full ITC, I will apply what provision? Deemed open market value provision. What is deemed to be the open market value here? 20 lakhs. What is declared in the invoice will be treated as the open market value. If I've already declared whatever is there in the invoice as the open market value, will I be able to go ahead and then again apply like, kind and quality? No, rank number one itself is available. So what will be considered to be the value of supply here? 20 lakh will be considered to be the value of supply here. Is that clear, all of you? Cool. Okay. So that's the primary understanding that we have. So we've finished our first segment of valuation rule, except for we have a computation that we have for corporate guarantee, and I wanted to take that as a separate discussion. And we will discuss that in the next session only, right? I wanted to close with this for today. I can go on for some more time and then discuss few more areas and all that, but this is our first day of the discussion. So if somebody wants to join in back for the live tomorrow, I don't want them to be left out in a lot of topic. So if anybody you think this is beneficial, then you should ask them to join for the next session. So for that sake, I would just keep this session to be concise. We just discussed, we have few more areas to discuss in value of supply before I conclude and then move to the next chapter. And I'll also tell you what is that I'm going to discuss next. I'm going to discuss charge chapter next, and followed up with charge chapter, I would also discuss a bit of, I will make a bit of discussion on time of supply, because together with charge it is very easy for me to discuss time of supply. I will touch upon ITC also in the next discussion. So I'll do charge, composition levy scheme, a little bit of time of supply and ITC discussion clubbed together with it. That will be the agenda that we have after this. So if you want to just prepare and then come, maybe charge is what you wanted to refer and then come for the next session, so I'll be able to do. I'll also be covering up a net GST computation, how the format should work and how do you compute that compulsory question. In the next session I will be able to do that. In tomorrow's session we will target that and then try to finish that off, right? I really hope that you guys have had some kind of an additional learning and then the sessions are useful. Only if that is useful I should continue doing that, right? So I hope you guys have had some kind of an understanding. If it is yes, I need a strong yes on the chat box, then I would be done. Yeah, okay, so that's wonderful. I hope that I'll see you guys tomorrow, right? I'll see you guys tomorrow. Then we will discuss further about these topics in tomorrow's session. So thank you so much for your wonderful patience in listening all of this. I will upload all the sessions that is happening on live the next day morning in YouTube. So you would be able to find these sessions on YouTube every day 10 a.m. from tomorrow. So I'm going to schedule it like that. So in case you've missed out something, you should look at TaxSchool. And then in case you've not joined the Telegram, you should go ahead and then do that. I'm going to just update those links here.